Yo, what is going on, everyone? It is your boy, the Master of Coin, and guys, today we are back with a brand new video on AUD CAD, and we're going to be showcasing not only a top-down analysis, but a 1 to 87 risk to reward ratio with a 1.3 pip stop loss, catching over 113 pips in the market. Now, it's crazy because this position actually played out to a potential 1 to 108 risk to reward. Now, myself, we did close out at the 1 to 87 because obviously that's when our final targets were. At some point, you just got to say, you know what, I'm happy, I'm done. I'm just going to get out of the market to free yourself some mental capital. But let's get into this trade breakdown and let's show you guys exactly why we took this trade. Now, before we do, I want to show you guys the timestamps. Right, you can see the before screenshot here was taken on the 20th of July 2021 at 3:34 Hong Kong Standard Time, which is basically about 30 minutes after London Open. And we also have another screenshot here as well. This was taken literally 15 minutes after this screenshot, but this is on a higher time frame, the 4-hour time frame, and you can see it obviously going down to the target. If we go back to the 4-hour, you'll see obviously the trade was, the screenshot was what, back here, and obviously we can see that it came down and completely annihilated our target. So let's really get into this analysis. Now, what I want you guys to understand is when we analyze the market, the most important thing we're doing and how we always start off is a top down analysis. Now, I'm just going to replay the market to exactly where the entry was, where this initial screenshot was. Again, you can see the before timestamps. Let's get into this. So first things first, guys, when you're analyzing the market, you always want to do your top down analysis. Now, what's the top down analysis? You see, imagine the market is like Google Maps. Now, let me pull up Google Maps and I'm going to show you guys how to actually trade with Google Maps. Yes, you heard it here first. So let's say, for example, right, I'm in Indonesia currently at the moment, right? We're traveling, we're living life. Now, if I want to go from Indonesia, let's say to Australia, right? We can say, okay, we just go from Indonesia to Australia. We go from here to here. And that would be like the daily time frame. That would be like looking at the weekly time frame, right? You see a lot of data. Sorry, not a lot of data. You just see, you just see the bigger picture. Now, if we, for example, scaled into a 4-hour time frame or on the market, what can we do? We're zooming in, we can see a lot more data. And that's the same thing with a map. It's like instead of now saying, okay, we go from Indonesia to Australia, well, okay, now we have to figure out what island we're on. Okay, we're in Bali. So, okay, we have to go to the airport in Bali and then fly from Bali to whatever airport is in Australia. Now, if we want to go down to, let's say, the hourly time frame, well, what are we doing now? We're zooming in again, we're getting more data. The exact same thing. Now we got to say, okay, what part of Bali are we in? Let's say we go down to the M15, we're seeing even more data, we're zooming in even more. Okay, now exactly what part in Bali are we? What roads have we got to go down? Okay, we're in Canggu at the moment, so we got to go from Canggu. Okay, we got to go down here past this road, past QR, and so we're getting more and more details. And if we go down to the M5, we go down to the M1, we're going to have basically every single twist and turn. So again, think of the markets, guys, like the map. What you do is you first off, you have your destination. You first say, okay, where am I at right now and where am I looking to go? Right? If I'm in Bali right now and I want to go to Australia, that's my higher time frame. And then once I actually want to physically travel from Bali to Australia, for example, I then zoom in and have to know exactly what road to turn. Because no, I can't just say, right, if I'm, let's just say I'm, here at this bake stop, right? This bake shop. If I'm here, I can't just say, "Yeah, I want to go to Australia," and magically, no, teleport there. No, I need to know exactly what turn in, exactly what road, and exactly where I'm going to go. So when we apply that to the markets, we always start off on a higher time frame with our higher time frame agenda. Now, when we start on this weekly time frame, what are some clues? What can we actually see when it comes to AD CAD? Well, first things first, we can actually see that we had a clear break of structure, right? We see that we had bodily closures below this level here. Now, this indicates a potential move far lower in the market. How do we know? Because we have this bodily closure here. Right, let me get the arrow. We have this bodily closure here, which is indicating a potential lower move in the market. Now, what else do we have? We also have some clean equal lows. We have some liquidity, right? We have that double bottom where a lot of retail traders are looking to take trades based off. We also, where are we? We've also come into a prior level of supply, a prior level of supply. Now, as we start to zoom in, what can we see on our daily time frame? Well, on our daily time frame, we had a liquidity run. We had this small trend line liquidity get clapped, and we had these equal highs again get clapped. right? What's the market doing? It's manipulating highs and it's breaking structure to the downside. This is clean evidence of a distribution. Matter of fact, this specific trade is actually a larger redistro. Maybe this might even go lower, but again, I'm not looking to forecast too much in the future right now. But for this specific analysis, we can see this redistribution of price. If you're new to distribution, I'll show you guys exactly what a distribution looks like, right? If we go to our, Wyckoff distro schematic, again, anyone can get these schematics. It's just, it's online. So now again, when it comes to schematics, guys, personally, these are not chart patterns. I don't look at schematics, as a chart pattern. It's a study of market behavior. Again, those manipulations of the high followed by the breaker structure to the downside. That's your Wyckoff schematic. Again, the biggest problem traders will have when they're trying to trade schematics is looking at them like chart patterns. These schematics, guys, are not chart patterns. It's a study of market behavior. So what can we see? We can see our general manipulation of the high, followed by a lower time frame breaker structure to the downside. Now, cool. What else can we see when it comes to this trade? Well, we can see that that clear manipulation. Guys, price is only ever trying to do two things. It's simply seeking and destroying and trying to rebalance. If we've just sought and destroyed, if we just destroyed all of this liquidity up here to the upside, what makes sense for price to do now? To come back and rebalance some of this inefficient price action which it made, which again, you can see it's rebalancing. Now, again, the market is always being drawn to liquidity. The reason why it's always being drawn to liquidity is because the institutions, in order for them to, fulfill orders, in order for them to get into trades, they have to be taking orders off other people, right? If they're buying the market, well, who's selling it to them? If they're selling the market, who they buying the orders off? Where are the orders coming from? Trading's a two-sum game. For every winner, there's a loser. For every buyer, there's a seller. For every seller, there's a buyer. So the market is going to be drawn to these pools and these areas of liquidity. So if we've just manipulated these highs to dip up here, and we now have resting liquidity below here, that weekly liquidity below here, we had that weekly breaker structure, right, which was showing us that we are going to have lower moves in the market. Well, what makes sense now for price to do? It makes sense for it to roll over and come and take the rest of this liquidity. What else do we have? We have a nice trend line here. Very nice trend line liquidity. And you can probably see maybe down here, for example, a lot of even new smart money traders, they'll see this as, oh yeah, let's look at that, let's buy the market here. Guys, this is the importance of knowing and understanding true market behavior and what's going on. Now, as we can see, again, we have a very nice and clean redistribution of price. Now, price also did actually come back into a level of supply here. If we refine this and we draw this up, now we have our last, sell that actually created the new lower lows. And if we actually extend this to the future, make sure we do this on the correct side of it. Now, there we go. Made that to like 500, right? We can see that price come and reacted very, very close to this level of supply. Now, again, it's not about the potential levels of supply in the market. For me, it's what happens after it comes into this market. And again, this is pretty much mitigated anyway. Like again, oh, you know what? I actually drew the level of supply. I actually missed it. So if we actually adjust that now to the true level, we're going to actually see that we actually get a perfect reaction. Now, if we start to scale and look at current price, what happens? We go down to M15. If we look at our structure, right, where can we see structure? We can see that supply is in control, right? We have higher low, higher high, higher low, higher high, higher low, right? We have this bearish market structure. And we can see with this bearish market structure that obviously the sellers are in control. Again, what are we getting? We're getting those manipulations of the high followed by a breaker structure to the downside. And when you see these manipulations of the high followed by the breaker structure to the downside, this is market behavior that supply is in control. This is market behavior that supply is in control. This is how you can spot distributions and redistributions. When you're seeing those manipulations to the high, followed by those breaker structures to the downside, you know that supply is in control. So obviously we have, supply in control here. Now, what we actually can do now is when we actually zoom into this area, let's actually take a look. What happens when price comes up here? We actually get a very nice, clean fractal distribution. Potentially on the 15-second, I'm not going to go down to the 15-second, but we can see a very nice turnaround in the market. We can see that evidence that supply is in control. And then from there, it was simply just a case of executing the trade, obviously on this little supply zone. Again, stops just above the high, as you can see on the screenshot. Right. Same stop loss, 93603, 93603. Again, on AUD CAD, we've got how many pips? Where is it? 1.3 pip stop loss. Very nice, very tight, just how we like it. And then, as you can see from there, we start playing the chart forward. Price comes in, taps us in, fills our trade, and then from there, it's just about holding and having that patience for price to now do its thing. Now, once you're in the trade, again, you have to have targets as well. What can we see? We can have liquidity to the downside, more equal lows, more equal lows. You know what? There's also some trendline liquidity here that I didn't even see until now, right? Trendline liquidity again. A lot of retail traders now, they would probably been looking at these areas to come and buy based off, but look what happens. Once price comes to this level of, oh look, the retail's looking at that as an uptrend. Oh look, bullish market structure. Third tap of the trend line, let's buy. Look what happens. Boom, clapped. Price comes through and continues to actually drop off. Now, again, once you're in this trade, guys, what we want to do is we want to mark up our devil's advocate areas to see exactly how price reacts from these different points in the market. And what we can actually start to see is, let's say, for example, price comes to this blue demand zone. As price approaches this demand zone, what you want to do is you want to start to monitor price to see if you get any evidence of bullish intent. But as we can see now, if you got evidence of bullish intent, because guys, what a lot of people do is they focus so much on their entries, they're not worried about their exits. Now, what you can see is as price starts to come down to this area, what do we get? We get another redistribution of price. We get another redistribution of price, which is showing us that supply is in control. There is no reason to go ahead and start buying the market, right? You didn't even get a break of structure. You manipulated highs and broke structures to the downside. Very clear evidence of redistribution, right? We manipulated those highs, then we broke structure to the downside. And if you also zoom out and look on the higher time frames, again, look at the price action we're getting. Look at the size of these candlesticks, guys. You wouldn't really want to be buying into something like that. Now, from there, as you field the trade, again, it's just having that patience for price to come down and do what it wants to do. And if we play the chart, we can see obviously that price came down and to do its thing. Now, again, if you did hold it and you did actually keep your positions open, again, like I said, we closed out here. But if you did, you could have potentially got a 1 to 108 risk to reward in the market. So the biggest thing I want you to take away from this video, guys, is the importance of top-down analysis. The importance of utilizing all of the different time frames to see different targets, different agendas, different things that price wants to do so that you can formulate a bias from there. You see, a lot of people, they're just going to go to one time frame. They're just going to go to the hourly, the M15, and they're just going to trade based on one time frame. Guys, like, again, back to the map example, right? If you want to go from one country to another, okay, amazing, right? Amazing. You got to know your destination. But to actually get to where you want to go, you can't just, just go one straight line. You have to go through each road. You have to take each turning. You have to know where the airport is. Where you're going to drive the car. What turnings you have to take. Same thing in the market. The market is literally like a map. You have to read it from top down. And by doing it from top down, that's going to help you understand what's going on. Because look, if we even go back to this redistribution here, right? If we even go back to this redistribution here, higher time frames are more powerful than lower time frames. On the M1, it looks like we cleared the low and then broke structure to the upside. But you have to understand that your higher time frames have more weighting. And if we go to the M15, well, the M15, it actually reacted from that level of supply. It didn't even close below that level. Cool, it manipulated the high, but there's a difference between a manipulation of the highs and a break of structure. Wicks are not breaks of structure. Bodies are breaks of structure. When you see candlesticks bodies close above on the higher time frames, that can give you a bit more power. But in this example, again, this is the importance of using those higher time frame candles and using a higher time frame to help build your bias and build your agenda. Also, again, on the M15, there's not much reason for price to come up. All of this price action was taken care of, right? This inefficient price action here, this imbalance here was taken care of. there's no real reason for price to come up. All this is evenly traded, right? This is pretty much all evenly traded. The agenda, the areas that need to come and get taken out and rebalanced are much lower in the market. So guys, I hope that video helped. If you guys do have any questions and you guys do want to know exactly more about how we trade, feel free to join my free Telegram in the link below. Feel free to check out some more of the videos that we have, or feel free to send me a message on Instagram if you want to know exactly a bit more of how we trade. So with that being said, family, thank you so much for watching this, and I'll see you all at the top from the top, because the bottom is way too crowded. Let's get it. Sheesh.